right, so a bit after 7:30 in the morning, I am in four trades. I am short in the Nasdaq, S&P, and oil, and I am long in gold. Now, the red lines you see, these are the short levels that I posted last night in Telegram. The blue line is a long level. So again, on every chart, after I post the levels, I simply put them on my charts. I find the halfway point between the long and the short level. And then if price is below that halfway point, I'm looking to take shorts. If it is above the halfway point, I'm looking to take longs. And if I trade in multiples, my first target is always the level itself. So if I'm below the halfway point, looking for price to hit the short level, the sell level, and then that would be my first target if I'm trading in multiples. For the most part, I'm trading one or two contracts, almost never three. There is no need. Now, yesterday was a very tight day in the indices. I'm hoping today is going to be a bit better. So far, there is some movement, especially in the Nasdaq. Gold moves nicely. Oil is okay. So just gonna stay with these trades. Again, I am almost always taken out on a trail stop. I trail the price once I'm in the money, and of course, if I'm wrong on the direction, then I'm just taking a straight up stop loss. And this way, if there is a move, I can participate in the larger move. But of course, if a market is range bound, then it will only give you so much. So of course, ahead of time, I have no way of knowing. I don't know if the Nasdaq is going to drop another 200 points or just going to come back and take me out. But I'm okay with trailing the price and leaving some money on the table because I did not take profit. Because when the trade first starts, you don't know if it's going to go 5 points or 50 points or 150 points. So you just gotta accept the fact that sometimes you're gonna catch great moves, and other times you trail the price and it you can be up a substantial amount, then it comes back and it takes you out. So I'm okay with that because I know every day there are lots of opportunities. And again, all I do, I'm following the same levels that I post in Telegram. I'm not taking any special trades that in my funded accounts. In my funded accounts, I do not take the trades. I just take the trades based on the levels that I post in Telegram. So I was asked this question. There was this email I got. It was interesting. It said, if your stuff is so great, why are you only charging $55 a month? The answer to that is because I am actually a trader. I trade. That's where my income is coming from. It's not from this little service here. Other merchants and whatnot, room moderators and whatnot, they, at least most of them, don't actually trade. And you know this, for example, at the end, I'm going to post, you're going to see my rhythmic dashboard, which I show all the time. And you can see the progression of the account throughout the month. Ask those people who charge, 200, 300, 500 a month for a room or for whatnot. Ask them to show you their trades that they are taking based on whatever methodology they are using, and the vast majority of them will not show you something like a rhythmic dashboard. And I'm not talking about some spreadsheet or a screenshot of something. We all know a screenshot could easily be photoshopped. I'm not sure if a video, I guess a video could be also, but you're going to see my rhythmic computer clock and everything else. So the point, I guess, I'm trying to bring out is that I don't need to charge a lot because that's not my main source of income. As a matter of fact, when I first began this service, I was thinking of doing it completely free, just so I can help traders. But two things. First of all, I am a capitalist, so I believe in getting reimbursed for my time and effort. The second thing is, I think when people get something completely for free, they don't put a lot of effort into it. They don't take it seriously. They have no skin in the game. So even though it's not a large amount, still, I think when people pay for something, they take it a bit more seriously. And so I want to work with serious traders. I'm not looking for someone who just, whatever, gets this, then never looks at it, never tries anything, and then cancels after a month. That's really not. I'm looking to have a community of successful traders. And to get there, you must put effort. I wish I could tell you, here are the levels, go get them. It still takes a while to learn how to trade them. Now, I do give some suggestions, and a lot of traders already have their own either indicator or methodology that they use. So they combine that with the levels, but you still need to be able to trade these levels. Yes, they are an edge, but you still need to be able to trade that edge. So that's my answer to that comment. So anyway, not much is happening, so I'm just gonna take a break and then come back and see where those trades are. All right, so I got stopped out on a trail in gold, still in the Nasdaq, still in the S&P. S&P is not doing much. Nasdaq is moving nicely. Still in oil, again, kind of sideways so far, but we'll see how this will play out. I'm gonna just leave this trade running, and we'll see. If I get stopped out, for example, in the Nasdaq, if I get stopped on the trail and then price goes above the midway point, I might even consider a long trade. So same in S&P. So we'll see. All right, going on 4 o'clock. So let's do a quick recap. So this is computer clock. Here is the rhythmic clock. So it all matches. Here is the P&L from today, from the chart trader and the rhythmic dashboard. So again, this is a $150,000 account. I started the month of May with 160,100, as I always have. $10,000 above the starting balance to give myself drawdown ability in case things go wrong. So a really choppy day. I think the whole range in the NASDAQ was something like 60 or 65 points. Just ridiculous, really. But still, if you have the right approach, it is tradable. So I'm just going to just show you a few things. So again, everything I do is based on the levels that I post every evening. So you see here, posted them somewhat late. Yesterday I was away from my computer, but still about 3 hours after Globex opened last night, these were the levels. And what I do, of course, is I draw them on my charts. And that's what you should do as well. Draw them on your charts so you know where price is relative to these levels. So let's take a look at a few markets. All right, so the NASDAQ was a buy 375, sell level at 242. So if we take a look and I draw them on my charts, you can see since early in the morning, the direction was toward the short trigger. Now, again, very low volatility. So, there was only so much you can get out of the market that's going nowhere. But you can see how the market, even after testing the halfway point, trying to get bullish, couldn't. So If anything, on the Nasdaq today, the direction was lower, and so a trader should have been taking short trades based on the idea. Again, normally the market actually reaches the level, but today there was just no movement. So it is what it is. But definitely staying on the short side was the way to go in the Nasdaq. S&P was a buy at 61, a sell at 36. So just gonna squeeze it a little. 61 and 36. So again, in S&P as well, the momentum was to the downside. And even though lack of volatility, so no really follow through on the way down. And actually in the channel, I was talking about how probably all the S&P can get to is 31, maybe slightly lower, but basically 31. I was saying it in the channel. Sure enough, S&P tested 31 a couple of times, but could not get any lower than that. Again, though, a trader should have been looking down at first for the market to hit that sell level at 36. Again, not a heck of a lot was available, but that's because of a lack of volatility. All right, gold was a buy at 36, a sell at 21. Gold definitely bullish for the majority of the day, looks like. Staying above, as you can see, the halfway point keeps it bullish toward the level at 36 and beyond. It's not unusual to test and retest the levels a few times a day. That's fine. So really a very good behavior from gold on a long side. Even though I was stopped out on the trail, still gold did well on a long side today. All right, oil was a buy 73.52, a sell 72.44. So most of the day was actually sideways to bearish. And again, when you put the levels on your charts, it just kind of lets you know, right? Even though it's sideways, if you were leaning on the short side, you probably did okay until about 12 o'clock. So at 12 o'clock, a definite change. Price breaks through the halfway point, and look what happens once it breaks through the halfway point, straight to the level. So this attraction that I spoke about so many times exists. There is this force at these levels. And that's when it's so important, whatever market you are trading, to put these levels on your charts. It just lets you know where is the probability. Below the halfway point, the probability is toward the short side. Once you're above the halfway point, now the probability is with the long side. It just lets you know what is the path of least resistance. All right, guys, this is a fairly short video, I guess. So that's all. Ask questions in the comments or email me. I'll try to make another one maybe end of this week or probably next week.